Our next guest says at some point it's time to put your shopping list together. Joining us now is Kevin Landis from First Hand Fund. So I assume you say that some point is now with some of these names that you like, and I want to go through all three of them, but start maybe with the worst performer, which is Bill.com, software player that does back-end financial operations for small and medium-sized businesses. Kevin, why are you going with an unprofitable company in this environment?
Because a lot of the startups we've invested in have, with a clean slate, chosen that as the best tool that they have. And startup companies are usually a good indicator of, because they don't have switching costs, they're usually a good indicator of who's going to be gaining market share in the future. And, if you go back to before the pandemic, their revenue was less than a quarter of what it is now. The stock has, over that, let's call it a 2.5 year period, the stock is up, but it's up maybe somewhere on the order of 50%, something like that. And so it's actually cheaper than it was back then. So it's a terrific growth story.
Well, so yeah, growth story, but so how do you value a company like this in this kind of changing rate environment? It's come down a lot from the highs, I don't know, early last year, but it's still pretty elevated from where it began.
Well, it depends on how far back you look. It's up a bit from pre-pandemic. So one useful exercise is you've got 2.5 years. What happened to this company? What happened? Never mind the mountain, the Matterhorn stock chart that they all have. How did this company change over the course of the pandemic? And what do they look like now? And that helps you put it in context. So, look, it's a great growth name. We're heading into a recession. I want to own companies that are going to grow. And I rely on people out in the world who are customers of these companies to tell me what they really like to use. And it's a great name. And some of the smartest people I know have quit their jobs so they could go to work there.
So you think we're heading into recession, but now is the time to buy some of the beaten down names, correct?
That's not trading advice. And let me just say, by the way, scheduling me to come on is, I'm going to just say, I think it's bad luck. It causes the market to go way down because the last 3 times it's been really painful. But I think you can't time the bottom here. You just have to put together your list of companies that you're going to be glad you bought 2, 3, 4 years from now. And for those, you're going to get your best pricing right in here when everyone's very, very fearful. And so that's the simple thinking.
And then ChargePoint is on your list, down 60% from all-time highs.
Yep.
Market not really feeling the EV plays and the sort of future growth companies right now.
Right. So ChargePoint is probably got the best built-out network of all of the charging companies. And, I can tell you from firsthand experience earlier this week, having taken a little bit of a road trip in a full EV, that charging network's really important, particularly when they forget to plug your car in overnight. So range anxiety is a real thing. And as more and more people get these EVs, they're going to have to keep building out these networks. And that's going to end up being a pretty good franchise. Maybe not as good as a cable company or a wireless carrier, but it's going to be a really great network to have.
It's had a rough quarter with the inflation story and the supply chain issues, Kevin. How much do you see that hurting the whole space?
Well, I can tell you, looking at ChargePoint, I've been frustrated lately because, I think I just missed the bottom and kind of wanted to step in and build that position back up. I think it's a long-term play. And the thing to do in these market meltdowns is to ask yourself, not what trade can I make, because trading is crazy and it'll just drive you nuts, but what can I own right now that will come out of this smelling like a rose? And typically it's a really good, strong company in an emerging market. It's a good growth story. And while everyone else is missing their numbers, these guys will be making theirs.
Yeah. Well, putting yourself out there, Kevin, thank you, on some of the hard-hit names. Kevin Landis from First Hand.